Folks, I want to welcome you to the midweek roundtable. My usual guest, Jeff Zinaneri's here. Jeff, thank you for being here. It's a pleasure as usual. What are you seeing in the market? What's going on?
It's that stimulus stalemate that's still hanging over the market. You know, everybody's waiting for this resolution because we need the money. You know, this country is starving for that money. A lot of people are literally starving. A lot of small business are literally like they ran out of PPP. They need another round of PPP. The real vulnerable ones. I'm not saying like all these guys that took PPP in the beginning because they didn't know what was going to happen. Now we know who needs the money. We need to get some money to people. And so I think if you get a stimulus deal, it's gonna only bolster that Russell play that you have. Small cap's going to continue to outperform. Main Street's going to continue to outperform. You know, we're getting closer to the election, and I just, you know, and I'm the same way as you. I'm a cautious guy in a way. Like when it's there, back up the truck and let's go all in. But when there's a little bit of like, you know, I don't know about this and I don't know about that, let's press fast forward a day and see what transpires. So I'm kind of in that holding pattern myself. I'm trading much smaller size. I'm much less committed to any longer term moves because I think the world is going to get flipped on its head kind of in a way. I don't think it's going to like, you know, be that way for many years, but I think for the couple of months after the election, the world's going to be flipped on its head. And that's where I'm at. I mean, I'm really following politics closely right now. I'm really following this election really closely. And I'm looking at the electoral map almost as much as I'm looking at my Bloomberg.
Well, you know, right. Well, this is definitely the time to do it. And I'm doing the same as you. I mean, this is definitely a time. And boy, they're going after, I mean, it's vicious. It's viciousness right now.
Yeah.
Emails, Hunter Biden. I mean, what does that have to do with this? I mean, it's just they're just throwing the stink into it right now. You know,
but you have to handicap, right? You have to handicap. And, you know, we always say this, like, it doesn't matter what my opinion is. It doesn't matter who you like, who you don't like. There's different flavors. There's different values that we all have that color why we want a certain party or person. And you have to respect that. That's key. But the market is the market, and the market is pricing in certain outcomes and assigning certain probabilities. And that's where, you know, our meticulous eyes need to be focused on what's being priced in, what's expected. And right now, I think that the likelihood of a Biden win, a blue wave, is pretty highly priced in. But what I've been seeing in my own research on the polls in the swing states and how the swing state electoral map is shaking out is that not so fast, my friend. We might be in for a big election day surprise.
Tell me more. I want to hear more about this. This is very interesting.
Yeah. So there's, as you know, as everybody, not everyone knows this, a lot of our viewers are out of this country. So this might be useful for people to know. Our election is not just, we have an electoral college. It's not just the popular vote decides who's going to be president. So different states, like every state has their own election. And then those states' votes go into an electoral college. And so certain states like California and New York are like auto Democrat for presidential election every time. Certain states in the South like Mississippi and Arkansas are auto Republican every time. And so then there's the swing states like Florida, Pennsylvania, Michigan, Ohio, North Carolina to a certain degree. And those are the states that like literally decide who's going to be president. And all of those states, there's a website that I don't know if you've seen it, but I recommend it to everyone out there called the Real Clear Politics. And what they have is they have an aggregator of all those swing states and the polls. And those polls, the spread has been shrinking. It's been shrinking. Yeah. And it's within a margin of error. And it's actually less than it was for the Trump-Clinton campaign. I'm sorry to spend so much time on politics, but it's interesting. It's a new thing that's transpired. It's actually shrunk a lot.
That was actually my question. Has it been tightening in the last few days?
Yeah, it's been tightening a lot in the last week. I don't know if it's Hunter Biden. I don't know if it's Trump getting better. I don't know what's happening, but it went from like 7% difference in the swing states to 4%, which is considerable tightening. Margin of error is between 5 and 6. So who knows?
We just, you know, with this election, typically I would say, you know, I would say, you know, based on what I'm seeing, I would say Biden, but based on what we've learned and what we know about Trump, you never, ever want to underestimate him because he loves to surprise people. That's his thing. You know, he's always, you know, pulling the rabbit out of the hat, so to speak. So I wouldn't, and remember, when we were 7, I was reading this in the paper. when we were 17 days away from the election. This is about a few days ago.
Yeah.
Yeah. And I remember reading something in the paper that exactly on that same day, 17 days before the election, Hillary Clinton was leading by the exact same number of points, that it was exactly 17 days before the election this time around. And they said exactly what you said. Don't, look at how things
And I'm
turned
here to
out.
tell you today that she was leading by more in the swing states than Biden currently is over Trump today,
Yeah.
less than 2 weeks out.
Right.
Take it for what it's worth. Something
right.
to
Now-
pay attention to.
Now, let's just kind of key off of that for a second here. In light of that, I've been, me and my Russell 2000 S&P analysis over this last weekend, I've been actually wanting to tell you, but I've been waiting for this day to tell you this. I've been doing some analysis on the correlation between the S&P and the Russell.
Yeah.
And here's what I found. And this is a very objective study. Every time the S&P gains over a certain percentage of the Russell for over a year and a half.
Yeah.
Following the 3-year period, the Russell outperforms the S&P. Okay.
Yeah.
And we're there, right? We're beyond that threshold by about 10 to 12%. So we're past that threshold. So the point is, this isn't 100%, but statistically, and again, this could happen. I mean, look, Trump can win, and Trump can do something, and he can fade the trade war, and we can have the same effect. So this isn't exactly. I'm not trying to.
No, I love the trade. It doesn't. For me,
Yeah. I don't want people to think I'm trying to like backdoor Biden win. That's not what this is about.
No,
really,
it's objective. Yeah.
Yeah. I'm just pointing this out. That I'm not saying how this can happen. I'm just pointing out what happens. That there's a good chance that we may see the opposite effect. And it would make sense because if you look at the correlation between the Russell and the S&P over 20, 30, 40, 50 years, it's very, very tight. And we've been diverting now for almost 2 years. So even if you weren't such a big researcher, and even if you didn't, you didn't have to do this study to figure that out. But if you put them next to each other, and if you did that study, and if you look at the point correlation, it's really telling us that the small caps are ready to move.
Listen,
high.
if you want to play a catch-up trade, that's the one for me. And I don't, I usually front run. I'm a front runner. I like to be with like the best. And I know you are too. But if you're going to have a portion of your portfolio that's playing the catch-up trade, it's got to be the Russell. To pick like a specific stock that's a big cap in a beat-down sector and look for value, it's not going to work. I love those kind of analysis that you just presented, because that's real statistical arbitrage for people that don't understand at home. When you take a data set that back tests over years and years and years, and you find certain triggers with certain phenomenon, that's how hedge funds make their money, is finding those little nooks and crannies in the market. And I love that trade.
Yeah. So now what I'm going to talk about is Biden bias. I just want to preface that. So
okay.
BABA, Chinese stock rising, top evergreen stocks, any energy, all the ones we've been talking about.
Solar,
First energy,
TAN,
solar, they're making all-time highs right now. So as far as that sector is concerned, that is favoring Biden. And again, I'm going to do some research next 2 days. I promised my readers this week that I would do stocks that Biden's darlings, and now I'm going to be doing Trump's darlings. But that's one of the things. Also, Plug Power, that's also been seeing relative highs.
People think that. Can I interject for just a second?
Please. This is a conversation.
I think that people assign almost too much. I think the China thing is very, very, very real, very significant. The trade war is very real. But I think people assign too much political credit and discredit to huge secular shifts like electric power versus fossil fuel. I think that's a trend that's been happening over many, many, many years, and it's a huge pressure on the price of crude oil and the price of gas, et cetera, along with the abundance and the technology that's made fracking a lot easier to source. That I think that's kind of like a secular play that continues regardless of who's president, et cetera, et cetera. And you can use, if you're really like a longer term investor, you can use like these short term news like misunderstandings of what's actually happening to time in. Just my 2 cents. Like,
I agree.
I think that's going to continue till like oil is worthless. I think like 20 years from now, people are going to be like, what, Dad, Grandpa, what was oil? And then you're going to be like, oh my God, yeah, I used to have to go sit at this gas station and pay these people money for this thing. And it was like, it smelled bad and it was weird and like pollution. You're going to tell these stories. And, that's just my personal view. I know it doesn't register with the rest of my political profile, but it's a secular trend that's been going on for a long time.
I couldn't agree with you more. It's just the way the world is moving. It's the way it is. And it doesn't agree with my political. I'm in the same boat as you, but yeah, you can't deny reality. You can't deny progress.
And it's better. And it's better for the world. It's better for health. It's better for society. It's better.
Let me ask you this. What is your plan for the next couple of months? Is your plan to hunker down, wait to see what the outcome is, and kind of wait for a little shakeout and get in there, or do you have other?
I have a couple of scenarios. I always like to think of possibilities and probabilities and scenarios, and like we're gonna have like a big. I don't want to preface anything, and I don't want to we're gonna have some stuff we're gonna do for the election. I don't want to, roll it all out and give everybody too much information on it yet, but I want to save some sizzle for that. But to make a long story short, I'm intermediately term and long-term bullish. Market's still trending really well. Easy money's going nowhere. Fed's going to be out with all kinds of stimulus. It's going to be just the same, more of the same old, except with like more of a, how do I say this? I found an interesting statistic out this morning. 54% of global equity value is domiciled in the United States of America. 54%. One country has more than half of all the world's stock value. I think that's going to increase. I think regardless of who's president, because I think that all these and technology is the key. Technology and innovation is the key. Yep. And I just think that those trends are going to increase. These companies like Snap that came out with this amazing earnings report,
or Square,
Snap, Stripe, like all these companies, they're going to keep killing it. They're going to keep getting market share. And I'm riding that momentum until the sun sets because there's nothing else to do with money. What do you do with money? What are you going to do? You can't get yield.
Where the money is. And I'm going to tell you, if you look at the numbers, look, Jeff, and this is just something to back into what you just said. And folks, pay attention to what I'm about to tell you because this is real hard data. Between 2008 and 2014, the Fed started putting money into the market, okay? The global stock market went from $34 million or $32 billion, trillion dollars.
Yeah.
$70 trillion.
Yeah.
By 2014.
Yeah.
Between 2014 and 2020, these are two 6-year periods.
Yeah.
Between 2014 and 2020, the global stock market went from $70 trillion to $72 trillion. The Fed and central banks were not putting any money or barely any money into the market. So when the Fed and central banks put money into the market, and yes, there's a it's not a coincidence that 54 or 50 are in the
But you know what happened in the second 6 years?
Yeah.
Was that U.S. percentage of the 70-ish grew substantially. Yeah. That's when you started seeing those multi-trillion-dollar companies in the U.S. I'm sorry, go on. Right. I follow this. I love these conversations because I look at
it's just these are just hard numbers. And people are like, wait a minute, you're telling me that the number doubled, global economy doubled between 2000. It did. And then you could look this up on Google.
I love this stuff. I follow this stuff religiously.
So between 2008 and 2014, the global economy more than doubled. And between 2014 and 2020, global economy didn't do squat.
Yeah.
And if you don't think that central banks and Fed had anything to do with that,
and you ain't seen nothing yet, boy. You ain't seen nothing yet. They're going to do things that blow people's mind.
I agree. I completely agree with you. And I think these companies, and again, just reading Bloomberg and Bank of America.
Did you see Bloomberg wants to go public? I'm sorry.
Yeah. No, I did.
I did.
I think America and the rest of the world are setting up for a very, very nice, good, long-term bullish market run, especially with all this money coming in. But I think we just need a little bit of a shakeout, a little more getting out. But
what I was going to say,
Yeah.
The second part of what I was going to say was I expect a shakeout with the election regardless. Whether it starts before or right after, I expect there to be some sort of correction. What's gonna dictate how I play that correction is who wins. And it's going to dictate what I buy. And it's going to dictate what snaps back the fastest. And that's my point of view on it.
I agree with you, and I appreciate having you on here, Jeff. I think your point of view and my point of view are completely in line.
But
I
either
think
way,
the-
we go back up. Either way, we
Yeah.
go back up. But we're going to be led by different things.
Yes, yes, and I think we're going to have. I think after the election, and I think here's what I think, and I'll finish it here. I think that, again, this goes with what you were saying. I don't think the election is going to be as instrumental as what set the tone with COVID leading up to the election. I think the music is written, the film is done. I think the election is just a part of that. I think the influx of capital, I think the positioning that the world took with this COVID, and the movie that we're seeing right now is a lot bigger than the election. I think it's driven by this new economy that started with COVID and is kind of shaping the world as we see it. And I think we have to kind of look at the election as a wrinkle within that, as opposed to the election being the big factor.
Can I like say one
Please.
last thing? My
Absolutely.
thought on that. We're going to be talking about this a lot in the coming weeks, but here's the thing. And it's agreeing 5,000% with you, but I just want to give some food for thought.
Yeah.
A lot of people are looking at the market now and saying Biden is being priced. Biden in victory is being priced in, which I agree with. And I think that you're starting to see it, like you said, in BABA and some sectors is getting really frothy in my estimation. But the thing is that what you don't realize is that it doesn't have to be binary. Biden wins, the market goes up. That is going up. That means Trump wins, the market's going to go down. Trump win could be even more bullish. It could be two flavors of bullish. It's like in Florida, in Miami, we have two weathers. We have super effing hot and we have kind of hot. And it's like you can have like an insane bull and you can have like a mild bull. But you can have an unbelievable, and this is what gets me super jazzed and super excited, because I had great trades in 2016.
Oh yeah.
You can have unbelievable short-term dislocations in the stock market, in the futures market, in like the 48 hours right after the presidency. Like the night Trump won,
we were
had a 12% round trip in the S&P futures in 24 hours. That's almost unheard of.
Yeah, we were just talking about that yesterday. Right around the election, we just looked at my numbers. I had 2 months in one program without a loss, like triple. I mean, it was crazy. It was
And
prime
it just
time.
went boom.
Yeah,
right?
it was prime. It was like trading this market after the February. It was just like that. It was just opportunity galore. You know.
That's right.
So yeah, I agree with you. And that just furthers my point that I think that the world is really stuck right now, and it makes sense because we got a huge world event, unforeseeability. People don't understand the dynamics of the market. But folks out there, both Jeff and I agree that the election is the storm that started in January and February is much bigger and is shaping the market a lot more than this election. I think the election is part of that process, part of the movie. But the aid that the Fed is giving, what's going on with the world and the world's adjustment to COVID is creating many, many opportunities. And regardless of who wins, Trump or Biden, I think those opportunities are going to be plentiful for us all to take advantage of. And I think it's just a matter of finding that thing. And I agree with you. I think tech is setting up. Folks, what we are seeing is a 4 to 5 year fast forward in technology because of this COVID-19.
That's right.
And
that is so
it is
right.
not going, and it ain't going back. And it's not going back. Jeff, I want to thank you for being here.
Thank you.
It was wonderful. And I will see you later this week. And thanks again for midweek. I really appreciate your feedback. And folks, for those of you who want to ask questions, give us feedback, comments, send us love letters, whatever it is, jeff@joyofthetrade.com. And for me, very simple, just use my old email, support@marketgeeks.com. That's